G'day there everybody, thanks a lot for joining me on this Monday afternoon market recap. The markets did close a couple of minutes ago. I have a couple more points to catch up on. As per the end of day print, the Dow Jones Industrial Average closed down 125 points. My chart at the moment is reflecting about 122.5. So again, roughly 2.5 points until we get that final end of session day close. However, the candlestick more or less is going to remain true. And it does look as though the markets are going to naturally rotate back down to our area of support. You can see on my screen right now, I've got this green rectangular box. This is sitting between 25,000 and roughly 24,600. Essentially what this means is X marks the spot. And the reason I say that is because if you go out to the weekly chart and have a look at not only the Dow Jones Industrial Average, but also the S&P 500, and if you connect, of course, these higher lows, as the market has pushed off from this base on the Dow at about 23,750, you can see that this is going to be a very important inflection area for the market moving forward. So if I bring up the oscillators for you, you can see that naturally we are starting to see a lot of sell signals on the daily time frame. This is also largely being mimicked, as we go out onto the weekly and also monthly charts. But as technical swing traders, we want to pay most attention to on the minor level of the trend, which is largely reflected by that of the daily time frame. You can see on my screen here, not only do we have dark candlesticks or really a series and selection of bearish types of reversal candlesticks, you can also see the oscillators are starting to establish that of shorter term divergence, not to mention that the MACD has now definitively turned bearish. So for the majority of people in that pro analysis class, we've been talking about this really for the past 3 weekends. I would encourage you, or those of you who are not in that class over the weekend, to sign up and have a look into that pro class, because it's really going to give you that definitive base an interpretation of the markets as we progress into the second half of 2018. But getting back into today's analysis anyway, we do have that reversal gap which set up late last week, which was certainly that of a bearish reversal. And really our narrative has been, first of all, on the Dow Jones Industrial Average. Well, were we going to see a pop to begin this weekend session? Or were we just going to see a little bit of selling resume immediately out of the gate on Monday? Now, what didn't happen today was that pop to actually close the open window. We did see that, however, on the NASDAQ. However, what I want to make very clear to you right now is that when you look at the NASDAQ leaders, when you're looking at Google, when you're looking at Apple, when you're looking at Amazon as at the close on Monday, what we have done is that we have just set up a series of shooting star candlesticks. I will bring those individual stock charts up in a moment, but it is reflective of that of the NASDAQ. And if you pay attention to this candlestick just here, you can see that this upper wick once again has now closed that open window, the window that set up between Thursday and Friday, which really began this very minor level of this selling wave. So if I bring out, I'll zoom out and show you that of the NASDAQ chart at the moment, you can see that we're still above, right, this of the intermediate trend taking off from those March and April lows. You can still see that we are making a series of higher lows, which is fantastic. That is the textbook definition of a bullish trend continuation in alignment with that of the primary trend. However, what you should be thinking about on the daily time frame is this market actually pulling on back down. And the big question becomes, well, is this market, one, going to hold up above these intermediate lines or these trend lines, which is still in effect? You can see them again. I'm bringing them up on my chart. This is the red extension. Pardon me, I just moved that of a trigger on my screen. I didn't mean to do that. But really, is the Dow, is the S&P 500 and the NASDAQ going to hold up above their respective intermediate levels? If we cannot do this, okay, if the market does not stabilize, for instance, on the Dow Jones Industrial Average, really, at most roughly around 24,500, well, then it does open the door for these markets to come all the way back on down and retest some of those February lows, those very early lows that we saw during that market, so that waterfall market sell-off towards the end of January into the early period of February. Now, this is the chart of the S&P 500. Again, this is the last chart that we're going to look at before we move into a couple of individual stocks. Also today, I'm just going to say Ford, we've been following this. First brought it to people's attention in that pro class, I think 2, if not 3 weeks ago. That chart has been very, very delicate. Today we saw the breakdown on Ford. So for those of you in pro, go check out the symbol F. I am going to speak about it in a couple of moments' time. But again, on the S&P 500, the difference between this market and that of the NASDAQ is that we don't have that upper wick. So we haven't actually closed the gap from Thursday and Friday. So this does open up the door again with the Dow Jones Industrial Average to come on up and actually to close this at some later date. Now, it's anyone's guess if we're going to see that on Tuesday. I don't think we are going to see that, not after the type of session that we have just printed in the NASDAQ. Of course, it is a possibility. But the question that you should be asking, rather than that just posed, is really, well, what's going to happen when we come on back up, or at least sell on back into this rising intermediate trend level? Because this is really what is most critical for these markets moving forward. It is premature really to go long and short at the moment, either direction that you do look at this market in, all right, what your analysis suggests, because when you start going out to larger fractals, this is where the pivots are very important. And if you can time these pivots here, i.e. if you pay attention to the analysis once price action comes on back down into this higher low, this is where we're going to set up the bidirectional trades in pro, and we're going to have a pretty decent bullish and bearish scenario at the moment here. Again, it's 50-50 as to whether or not this market closes the open window or whether or not we just see a continued sell-off, which could essentially become another buy the dip opportunity, which would then open up the door to close this window, which again has established itself towards the end of last week. So that's going to be the market recap. I did just want to point out again, on the NASDAQ, you've got this sort of pseudo shooting star type of candlestick, but it becomes very pronounced when I start looking at a lot of these tech leaders. Have a look at Apple, a big upper wick. This is reminiscent of that of a top, or at least an intermediate top on Apple, and it makes a lot of sense because again we still have this open window, a lot like a bunch of other tech companies. If I go into Amazon as well, have a look at this. This is very similar to a gravestone doji. It is that of a shooting star, but you can see the parallels between these two candlesticks. This in and of itself does not really first of all, it's a very reluctant push to a new short-term high, and really what this leads to is generally reversals and incredible weakness moving forward. So again, you can see how this is syncing up between a lot of tech companies. Boeing Airlines, we actually have a short position in below 344.26, which was down today. If we do see the market continue to pull back, this 322 target is certainly a very good trade. That's going to be about, another $20, so to speak, or at least from our original entry point down to 322. If I can skip through a couple of these stocks, I'll actually go through them. Baidu was a past trade below 248. We hit our target at 230. But really since then, we haven't done a whole lot. A lot of these plays, by the way, we spoke about in Pro, we're actually not looking to short them. The reason for that is because they are back down at historical support. So essentially once this selling wave is finished and we do see these markets pulling back down into this rising intermediate trend line, we're going to actually look for bullish short-term reversals to come on up and close a bunch of open windows. So just gave you a little bit of a secret or a key there when it comes to our analysis moving forward. But I would encourage you to have a look again into that analysis class if you're looking for a lot of in-depth sort of analysis on the markets and also individual stocks. Caterpillar's still pulling back. We have to be patient on that. The same is true with COP. Watch for that Bollinger Band squeeze that we spoke about. CVX going absolutely sideways. Not a whole lot to report on, which brings us into Google. And again, you can see the similarities between Google and that of Amazon. We have another sort of pseudo gravestone doji, if not a shooting star, if not a full-on high wave spinning top candle. So short-term indecision. The short-term indecision is coming at a lower high, and we still have potentially a really nice sweet spot down here at 1,200, which again, if you have a look at a bunch of these oscillators across the board, not only on the markets, but also individual companies, you are starting to see some pretty impressive sell signals really set up and align very constructively across the board when we look at these oscillating panels. So it's not only on one oscillator, it's on a bunch of oscillators, which again adds to the immediate weakness that we're seeing in the markets at the moment. So that's going to do us when it comes to really our top 12 individual trade list. As I said, I just wanted to show you Ford Motor Company today because this is something that has been of interest to me. Really the reason for that is because we have been at this critical pivot point, and pivot points are fantastic to trade from, or at least respect and set up sort of bidirectional trade setups when you get to these very important inflection points. You can see here, for a number of reasons on both support and resistance, let alone the psychological round number, we've identified this as a major potential sort of inflection point on Ford. And really it didn't matter which direction this broke. I mean, we were having a discussion actually of support. I mean, to say that, look, if we rally, we've actually got a target up here at about $11.28. And this is coming off from essentially this declining resistance area that you can see on the top hand sort of side of my screen. However, we also were talking about, well, there's a lot of hot air, all right, or open space between the current trigger at 974 all the way down to 722. And it didn't really bother us which direction this went. I was sort of under the opinion that we were going to actually see the bounce before we produce that next lower high, which would then ultimately break about 974. But today being Monday, on elevated volume, you can see that we're down about 27 cents. This is a major percentage move on Ford Motor Company. I'm just going to actually reset this and see if 27 actually changes again. I began this recording a couple of minutes after the bell, so I don't have the full end of session data, but what you'll see is probably this is going to turn. But at the moment anyway, it is that of very close to that of a long day Moribosa when we are cracking this very important support area. In fact, a number of weeks ago, I think we've just printed a fresh 4 or 5 year low. This was after the closing price just here. And this is when I started to really pay close attention to this, all right? So we've moved sideways and we're starting to break down. If I bring up the exponential moving averages, you can see that we're bouncing off from that declining 10 EMA. So this has got bearishness written all over it. It looks as though we're breaking into a new trend, and we've just cracked a critical area of support. So if you see weakness in the markets, you could see really this begin and continue to more or less fall off a cliff and really move down towards that 722 area. It seems a little bit unbelievable. However, I've seen this play out enough times to know that it is certainly a realistic chance of actually occurring over the next couple of months. Also, when we do break this support area, we can come on back up and retest it, but at the moment there are no buy signals whatsoever, and we do have accelerating volume to the downside. You can see we're actually down 28 cents as at the close on Monday. So think about that. If you're not in Ford, it's probably not best to actually enter it on Tuesday. You would have to wait for a bounce, but if you're in at 974, you should have a big smile on your face after that analysis and sort of following along with Ford for a couple of weeks before we've seen this actual sell-off continue. But outside of that anyway, if you have any questions, please email me, success@pivotpoint-trading.com. Hope that market analysis has helped you. And again, I do think we are very close to a critical inflection point on the markets, and especially if we see this intermediate support area break. If you see that, you're going to see these markets sell off quite ferociously, and you are going to be, or at least I think a lot of people, based on, I guess, a little bit of complacency out there, at least wide scale complacency, a lot of people are going to be shocked as to the potential sell-off that we may be moving into, depending on whether or not this intermediate level of the support area trend actually holds moving forward. All right, so that's going to do us as at the close on Monday. Enjoy your night, everybody. It's James signing off on behalf of Pivot Point Trading. All the best. Farewell.